But is the data reflecting the inflationary impact of tariffs? Let's discuss with Joe LaVorgna, counselor to Treasury Secretary Bessent, and here on set with me. It's great to see you, Joe.
Same
Welcome.
Here. Great to be here. Thank you.
All right. So inflation data that we got this morning, core PCE, basically in line with the month prior. And actually, we saw the month before that revised lower as well. What is that telling us? Actually,
I like to look at the goods piece because that's where the tariffs would show up. And goods prices, annualized goods prices since President Trump took office are only up about 5 or 6 tenths. Even if you look at the data from April, when all the tariff effects really started to drive historic revenue increases, the increase is well under 2%. There isn't a tariff effect yet in the data.
Does that change? I want you to take a listen to Ken Griffin from Citadel. Here's what he had to say about this on our air yesterday.
And the belief is that the inflationary impulse from tariffs has only passed about 50% through to the economy at this point in time.
So you see it coming?
It's still coming. It's still coming.
You don't buy the argument that the others, the exporters, pay the tariffs, that the importers absorb the tariffs in their margins, and that the consumer won't feel it as much.
I mean, you don't believe that either.
This is what the White House has been trying
to... That's just not going to happen.
Why?
It's not going to happen.
The consumer's going to pay.
The consumer's going to pay.
If you look at things like autos, clothing, pharmaceuticals, since April, there's been virtually no inflation. Now, that may change at some point. My colleagues in CEA said if they looked at the relative price of imported goods, they're actually down relative to other products. So, again, this debate, I think, is very robust and still vibrant on what, if any, effect tariffs are having, who's absorbing them. But the thing is, the fact that we're talking about this and it's almost October tells me that the people who worried about the tariffs are wrong because this was supposed to occur way back in the spring. So it's clear that President Trump was right on this, that U.S. has negotiating power, that the bulk of the tariffs are being absorbed by foreign exporters. Now, if at some point does it show up, it could, but it's still going to be quite de minimis, and the broad inflation trends, I believe, are much lower.
And of course, we got the announcement that we've got more Section 232 tariffs that are going to be going in place as soon as next week. In some cases, regarding pharmaceuticals, there's a lot of asterisks attached to that as well. Furniture, other types of household goods, heavy trucks as well. So how does that factor in?
Well, the pharmaceuticals, the EU and Japan already have an agreement with the administration, so they're excluded from these new announced tariffs, and more details will be forthcoming. What's interesting, you asked about the inflation data, and that was what people keyed on this morning. But to me, the real story was the consumer spending numbers, which I saw and said, oh my gosh, these are Trumpian-type numbers. We're going to get these huge increases. And I said, we're going to see GDP marked up. And sure enough, the widely followed Atlanta Fed, which I highlight a lot because they're nonpartisan, they're objective, has GDP at 3.9. I would have liked them to go to 4, but that's 4%-ish GDP following nearly 4% growth last quarter. That's exactly what President Trump said would happen. It's what Secretary Bessent's been advocating, and it's in an environment where inflation's coming down. The benefits from the tax bill have yet to be felt, so the forward is great once the 1BBB kicks in and these big tax cuts for middle and lower income consumers are felt in 26.
So you see this as a read through to the fact that wages are increasing or growing faster than the pace of inflation?
Yes. Well, actually, if you look at what we call the real blue collar wage boom, which uses a variation of the CPI, that is showing growth in excess of 1%, which is the fastest 8 months of any president in history. We're now back above where we were at a similar point in President Trump's first term. And that is one of the reasons that we're certainly fueling much faster consumer spending. Workers are taking home more after-tax pay as the cost of living is slowing.
So how do some of these provisions in this tax bill now factor in, especially when you are talking about the blue class or working class piece of the consumer as well? I mean, I think about no tax on tips. You guys put out, the Treasury just put out guidelines on this a week ago. Although it looks like automatic tips are not included in that.
That's right. So this was what President Trump wanted, and he pushed really hard to get it signed on July 4th. I think many people outside the administration thought it would happen. Secretary Bessent worked really hard with the various parties to get it done. The president signed it as he wanted. And what that allows is the IRS to write the rules so that people could get their money early in the new year. What you're referring to are qualified tips. In other words, if you go to a restaurant and that restaurant charges 20% fee automatically, whether you're with yourself or another friend or whatever, or a group of 6 or more, whatever it might be, that's not included. So it has to be a voluntary tip that then is not part of the process. But the other thing I want to just add, what's really neat about the legislation is that it includes digital asset folks, so like YouTubers, podcasters, live streamers. Like, it's a very expansive list that's designed to take advantage of the 21st century economy.